Hi, my name is Paul and welcome to month number 10 of my $100 per month Canadian stock portfolio series. This month onwards, I've decided to make some very big changes to the way that I make videos for the series. Now, if you're a regular follower of the series, then you've probably already noticed that this video is much shorter than usual, and that is intentional and will continue as the series progresses. But before I get into the reasons for this change, I want to assure you that you won't be missing out on any of my content. Instead, I'm going to be breaking up the usual larger monthly videos into multiple smaller videos that are each focused on their own specific topic. So things like the in-depth quarterly report breakdowns will be getting their own dedicated videos. That said, the monthly series episodes will still get a brief summary of any important news that's gone on between the months. So you will still be getting all of the usual content, just in a more frequent and timely fashion. Also, some of the longer and more repetitive parts of the monthly videos, like when I went through the 3-minute rundown of why I hold these same 3 companies in the portfolio each month, those parts are going to be cut out. Mostly because I want to make my videos more consumable for both returning viewers to the series and newer viewers who might be interested in watching several episodes in one sitting. Basically, I realized that I needed to improve my presentation quality in order to make my content more appealing to more people, and making videos that are more topically relevant is something that should benefit everyone, myself included, since it's kind of a grind recording, creating slides, editing, and doing post-production work on a 30 to 40 minute video in about 2.5 days every month. Unfortunately, there probably were at least a few people who really liked the monthly long-form content that, until this point, made up the series. And to those people, I am sorry. It just doesn't make any sense for me to go on making my monthly videos in that format anymore. But if it is any consolidation, I am always going to be working on larger long-form projects and they will be released upon completion. Unfortunately, these sorts of videos also require a lot more time and effort to make, so I can't really release them on a regular basis. But hopefully that is at least somewhat of a satisfactory consolidation to you. Again, I do apologize for the changes. Moving along, like I said earlier, I won't be giving a summary of how each of the businesses held in the portfolio operate. But if you are interested in learning about the 3 holdings, then I'd recommend going back and watching the series from the beginning. If you go down to the description box below this video, there you'll find a link to the portfolio series playlist, and it includes every single video from this series in order from first to last. Also, while you're in the description box, there's a document there that outlines in detail all of the goals and rules that I abide by when investing within the portfolio. So check that out too if you're interested. Now let's get on with the actual video. And as you've probably guessed, September was another brutal month for the portfolio. As I do every month, at the start of September, I added $100 of cash to the portfolio, and I had $2.07 in dividends that were earned in August. I then invested all of that money and somehow lived to tell the tale. With that capital, I purchased 5 shares of the Morguard North American Residential REIT, 1 share of Knight Therapeutics, and 0.234 shares of MTY Food Group. When all was said and done, I was left with 1 cent of cash remaining in the portfolio. As of the market close on October 6, 2022, that $102.07 has dropped in value by 5.56% when accounting for the dividends received in the month. Now, this month's dip was once again led by the largest position in the portfolio, the Morguard North American Residential REIT, which, as of the close, experienced nearly an 8.6% sell-off over the course of the month. This most likely had to do with real estate pricing fears, since most other REITs also experienced similar drops in value, though the broader market sell-off in lieu of the Fed's continued rate hikes probably added to negative sentiment for the stock. That said, I'm not very worried about the crash in share price because I believe that the current discount to Morguard's tangible book value per share provides a more than adequate margin of safety for the stock. Even if we were to look at Morguard's share price at the 52-week highs, back then the REIT's net asset value was discounted by over 55%, and that was at share prices that were more than 35% higher than this month's closing price. Add on top of that the fact that rent prices tend to increase during times when housing demand is dropping, and it looks to me like Morguard is in a much better position than the market is giving it credit for. As far as other Morguard news goes, the REIT completed another surprise acquisition by purchasing the Rockville Town Square located in Rockville, Maryland, which is actually a retail property and not a residential property. Though the Rockville Town Square is attached to 492 apartment suites that the REIT already does own a 50% stake in. From the press release, we also know that the deal cost the company roughly $33 million, excluding closing costs. So it was a relatively small acquisition for the REIT. That said, we didn't learn too much else about the property, but based on the management's comments, it seems like they're keen on just operating it as is, though we'll probably get much more information in the quarterly financial results and on the conference call. Currently, these are expected to be released later on this month, with the release date set for the quarterly earnings report on the 25th, and the conference call is planned for the 27th. So you can probably expect a video covering that in detail sometime around Halloween. Next up was Knight Therapeutics, which is the smallest position in the portfolio, and it also fell in price this month by about 4.1%. And there was no important news regarding the company this month, so I'd assume that this drop was mostly related to the greater market sell-off. Lastly, we have MTY Food Group, whose shares only dipped 1.52%. Over the course of the month, it was announced that MTY did successfully complete its acquisition of Barbecue Holdings, buying all of the company's shares for $17.25 each. Noting that, we should receive some additional information in the conference call, which alongside the third quarter results came out in the morning on Friday, October the 7th, which is actually today for me as I record this. But unfortunately, because of when the acquisition closed, we didn't get to see the full extent of the acquisition's impact on the balance sheet. Though we did learn that the company chose to use cash and debt instead of issuing shares to complete the deal. Now, I did manage to give the quarterly results a quick look through this morning, and my initial impression was that things seemed to be going well, with most segments of the business seeing growth across the board. Profit margins, however, did decline, but this mostly just seems to be due to supply chain issues and labor shortages, which should normalize over time. But I'll need to listen to the conference call and dig into the nitty-gritty before I can come to an informed conclusion, which will be shared in my video on the earnings information and will probably be out next weekend. The last thing that I want to touch on is that this month, MTY's retail product lineup added one new product into the mix, and I've actually started seeing some of the Toujours Mike's frozen pizzas in my local Zehrs, which was an unexpected surprise since last I checked, MTY's products weren't being sold in Zehrs at all. That's about all the news that I had to go over, so let's transition into how this month's losses affected the greater portfolio. The total value of the holdings now sits at $812.35, representing an unrealized loss of 10.45%, which makes up nearly a full month's worth of contribution. Needless to say, my portfolio appears to be on track for a pretty brutal end to the first year of investing. If I compare my portfolio's performance with the benchmarks, this month I once again underperformed the ETFs, whose monthly results were all positive in the range of 0.16% to 6.11%. Now, most of the gains from these ETFs came from the quarterly dividends that were received, but even without these dividends, my portfolio would have still pretty seriously underperformed. And there's not really too much that can be done about that, since having a poor monthly performance is something that's just going to happen every now and then. As for the total portfolio values, my portfolio has now become the worst performer by a fairly large margin. The next worst performing portfolio is the Canadian Large Cap ETF, which is still worth $36.31 more than my portfolio. The most surprising thing this month is that the best performer is currently the Global Value ETF, which is the only one out of the group that has yet to receive a dividend, and despite this, it's only down 3.83%. Taking a look at this chart, which shows the performance net of contributed capital, you can really get a feel of the fall from grace that my portfolio's had over the past few months. At the end of July, my portfolio was far above the competition, and it was the only profitable portfolio of the group. Then, throughout August and September, it's been almost a straight line down. Comparing my performance with my goal line, which represents a 12% annualized compounding rate of return, I'm now lagging by over 13%. Which is the largest deficit yet. So things are looking pretty bleak at the moment, but as I've said the whole way through, high levels of variance are to be expected. Also, none of the reasoning behind my investments have changed or been proven wrong. The only thing that's changed is the price. Personally, I felt like my investments were discounted at the even higher prices that I'd been paying over the last few months. So now that I'm getting an opportunity to buy the same companies at even lower prices, I can't say that I'm exactly upset by this. In fact, if anything, I'm pretty happy to be buying shares at these prices. But before I do get into this month's purchases, I want to mention another change that I'm going to be implementing going forwards. From this month onward, I've decided to remove the versus portfolio column from the monthly comparisons datasheet. This is because it was a poorly conceived metric that was intended to add the monthly cash remainder of the benchmarks when comparing their monthly performance to mine. This was done because most of the benchmark ETFs don't have fractional shares offered by Wealthsimple, and because of this, they have large remainders of cash at the end of some months. Unfortunately, when creating this metric, I failed to account for the months where there would be a negative cash remainder due to the excess capital from the previous month being invested, which made it appear as though there were additional losses versus my portfolio. Because I was relying on this metric to determine how the benchmarks performed against my portfolio, last month I falsely concluded that my portfolio outperformed the benchmarks. Now, I could have gone ahead and fixed the issue with the monthly versus portfolio equation, but ultimately it seemed kind of redundant since the monthly return on invested capital metric does a perfectly good job of showing comparative portfolio performance. Just in case any or all of that was hard to follow, I want to clarify some things by saying that I will still be comparing my portfolio's monthly performance against the benchmarks. Also, the versus portfolio column for the total portfolio returns is still accurate since it accounted for all capital within the benchmark portfolios, and I will continue to use that column to compare total portfolio returns. The only thing being removed here is the versus portfolio metric that was specifically used to track single month performances. Alright, and with that out of the way, we can get into this month's investing. So this month I have $100 of contribution and $1.88 in dividends and remaining cash to invest for the month. And my plan is to focus on putting as much money as possible into Morguard shares since I believe it's trading at a much greater discount than anything else. So I'm going to try and buy 6 shares of Morguard, 1 share of Knight Therapeutics, and put the remaining cash into MTY Food Group. So I'll be right back once I'm inside the portfolio and we'll see how that plan goes. Alright, so I'm back logged into the portfolio and I have, I believe, $101.88 to spend. We're going to start out with Morguard. And we're just going to do a market buy. We should be able to get 6 shares for pretty cheap here. Yeah, $88.80 is the estimate. Now I'm just going to buy my Knight Therapeutic shares, which I think I'm just going to do one. Yeah, I'm just going to do one here. Confirm that. And then the last thing that we have is MTY Food Group, which we will spend the $7.49 that remain. All right, and that says that it'll be filled by the end of the day. We'll see if that actually happens, but I'll come back in a little bit. Okay, I'm back, and as it currently stands, I've successfully received 6 shares of Morguard for $14.83 each. I also received 1 share of Knight Therapeutics for $5.29, and lastly, I got 0.1411 shares of MTY Food Group at a price of $53.06 per whole share. Taking a look at the total holdings, after the market is closed on Friday, October the 7th, the portfolio now has 43 shares of Morguard worth about $638, roughly 2.71 shares of MTY Food Group worth about $146, and 20 shares of Knight Therapeutics worth exactly $105, leaving no cash left over in the account. Moving on to dividends, September marked the very first time where the dividends received weren't higher than the previous months. And that's just because this month, all of the dividends that were earned came from Morguard, whereas in the previous month, I earned dividends from both Morguard, who pays a monthly dividend, and MTY Food Group, who pays quarterly. So this month was just Morguard, and I received $1.87 in distributions from the REIT. Cumulatively, the portfolio has now received a total of $8.99 in dividends since inception. And next month, it's projected that the portfolio will earn an additional $2.16 from 37 shares of Morguard that were held on the ex-dividend date. And if everything goes as planned, this should be a new record for dividends earned within a single month. Now, if we go ahead and take a look at the portfolio's current annual yield, I can now expect to receive $32.36 in distributions on an annual basis, assuming that I don't buy or sell any shares and the companies that I do have shares in do not raise or lower their dividends. This gives my portfolio a yield on contributed capital of 3.24%, which is up 12 basis points from last month. And this change mostly just has to do with the fact that a larger percentage of capital has been allocated to the higher yielding REIT this month, relative to its weighting in the portfolio at the end of last month. And that was everything that I had to talk about in the monthly video. So feel free to leave a comment letting me know if you prefer this new shorter format of the monthly series. And before you do go, I do encourage you to be aware that this video should not be used as a substitute for doing your own research. This video is not financial advice, and it does not have the information required to make good investment decisions on individual securities. This video was made entirely for the purpose of providing inspiration and insight into my personal investment decisions. I am not a financial advisor, I'm just a Canadian who likes to invest and share my opinions with others. And in doing so, I hope that I was able to provide you with something of value. And if I did, then please consider sharing it with anyone else who might also benefit from it. Thank you for sticking with me all the way to the end, and enjoy the rest of your day.